All right, so let's talk about why support turns into resistance, why resistance turns into support, why sometimes you might see something like stock just dumped and then you're seeing a slow trend up, etc., etc., right? We're going to talk about all these things. Um, but why support turned into resistance? This is people people think that like the market is this algorithmic thing and like it's just not the case. The market is absolutely psychological. You have to understand that's why the same patterns that have been happening for decades happen today in the stock market and every financial market ever, right? The same patterns because supply and demand is psychological, right? Everything in the market is psychological. Psychological. So let's look at why support turns into resistance, and then we'll even go with some live examples, right? So imagine this. Imagine you are a buyer and you see the stock downtrending or whatever, and you say, "Oh, I want to place a large order," right? So you actually manage to keep the stock up. Okay. Now let's say we're making the assumption that you're a big player or there are multiple small players that are buying at a specific price, right? We'll just say that they are the people that are actually managing to support the stock, right? There are sellers here that are selling the market down, and at this point the buyers are more aggressive than the sellers, and they are managing to absorb a lot of that activity, right? So why would support become resistance, right? If we have support here and we actually break through this level, right? The sellers or the sellers that are present are more aggressive than the buyers here at this support. Why would we come up and reject and hold this level again and then maybe continue a downtrend? Why is that possible? Well, let's talk about it, right? If I'm a buyer here at support, I don't want to sell, right? I don't want to be wrong in my position. You have to understand. I want to be right. So if I sell, why would I want to sell and then be right after that, right? Why would I want to sell and then immediately the stock goes in my favor and I regret selling, right? This is why support turns into resistance. And same thing, if you are a buyer and then you see some sellers here, right? Or et cetera, however you want to explain market theory. In my case, I'm explaining it that demand is more aggressive than supply. In this case, they're about the same, which is why prices are stagnant here until demand gets more aggressive than the supply here. Why would this flip into support, right? Because whoever is selling here, you gotta understand, there's a large amount of selling here or large amount of orders there. They don't want to be wrong, right? So when we squeeze out the sellers that were here in this area, right? Ultimately, what that means is that when we come back down to those same prices that they squeezed out from, right? They're going to say, man, this was a long, and we're back at these prices. Or maybe they even reversed their position, right? So ultimately, these prices are now acting as the support because it's a bias change. When they flip their position, when they squeeze out, they aren't squeezing out because they still think they're right. Maybe they do still think they're right, but they have to use risk management, right? So the moral of the story is they're squeezing out because they have to. And they have to squeeze out, and that creates a bias flip, a bias change. They're immediately saying, man, I was wrong, or I am wrong, or I need to change my position. They change, and that creates a bias flip. So let's look at this now, okay? Let's say that. We're going to go to some live examples in just a second, but let's see the psychology of something. I mean, something is just so aggressive to the downside. So many people hitting the bid, and you see volume, right? Volume is dying off like this, and now you're seeing it push back up. What's going on here, right? What's going on here? And volume is still fairly low, right? But we're in some kind of exhaustion setup, right? Some bearish exhaustion. If you don't know, that's one of my two setups, exhaustion and capitulation, right? So you see a force that's pushing this to the downside, and then the lack of force is actually causing it to turn around because it's easier to go up. Makes sense? The amount of interest that it takes to move something to the upside is very small because all of the interest is at higher prices. That's a bearish market, right? There's not much interest at lower prices, but there's interest at higher prices. That's a bearish market. You have to understand, okay? So why would this just let's say this? Because exhaustion is defensive, so in reality, you'd see something like this, and then it'd continue the downside. But that's in a normally bearish scenario. What is a scenario that is not normally bearish? In fact, it seems bullish, but the volume actually states that this could still possibly be bearish, right? If we're looking at the volume, and you see massive shorting, and then what happens here? Let me actually make that a little bit better. Well, I'll start down here. What happens here? We passed these prices. Exhaustion is no longer defensive, right? But look at the volume. We did not see, and I know, I know I'm just making up this market right now, but this is where I've seen plenty of scenarios, and I can even show you some, right? It's the same deal. The volume saying it, the interest is still not at lower prices, right? The interest is still at higher prices. So in the event that we come at these higher prices and then we start seeing interest here, we start seeing interest pick back up here, what does that mean? Okay, that means that people that might have been shorting here, okay, are now covering here, especially if the interest that came in here were above it. We are making higher highs, higher lows. We're rejecting. Support's becoming resistant. Resistance is becoming support. There's bias flips going on. That's what it means. Now, that doesn't mean that that's final, right? It means that it's just a bias flip. Because in this event, we could have seen something like this. We come up, we make a new high, the interest is here, interest is coming back, and instead of squeezing, like the previous example, instead of squeezing, they're adding into their position. They're adding into their position, forcing the market back down. That's why you see capitulation turning into exhaustion, right? I hope that clarifies some things on this kind of scenario we see in the market. Support turning into resistance, resistance turning into support. Why things are psychological, bias flips, stuff like that. If you want more education on this, let me know in the comment section. I can make deeper videos, right? Actually, I forgot. I want to show some live examples because it's one thing to just do a whiteboard scenario, right? But let's show some examples. I think that's great. We'll pull up some examples. And this is not, you know, I mean, really, this is, here, we'll just pull up, like, here we go. Okay. So, here we go. Okay, look at any of these. You can, it happens everywhere. Everywhere. Okay, look at any of them. We'll just pick we'll just type in a random date on the NASDAQ. 2016, August 14th. Okay. So here we go. Okay. Lots of shorting here. Essentially we've got some kind of outwards of supply or something, but really look at this scenario. Okay. Lots of shorting, lots of volume, bearish exhaustion here. We should be seeing exhaustion turning defensive, right? Let me actually turn off this volume profile. Okay. You should actually be seeing exhaustion turning defensive, which means that this squeeze that happened here of these shorts, this technically was the unlikely thing to happen. The probability was here that we should have came back down, and essentially it happened here. If you look at these at this move down here, if we look at this move, so a bearish exhaustion coming down, and at these prices, some people like to use discount, use a Fibonacci. Oh, at a discount, right? We're gonna see it go back towards the lows. We're gonna see another move, and that's what happened here. But the demand here was too much, right? So it's never cookie cutter. This is why you need to be able to read the volume. If we squeeze these prices here, why am I gonna go short? We flipped bias already. Resistance turned into support. There's no reason to short anymore, right? So this is something you would watch. And essentially, the volume still kind of said it was bearish until we got the squeeze. Right? So, and we can basically deem that this squeeze here, basically, of this supply, right, is going to turn into support, right? If we looked at it, see how it's turning into support, and then very likely, since it's turning into support and holding, it would squeeze out the next kind of sellers up here. That's also very likely, but in this case, it didn't happen, right? So that's one scenario. Let's look at more scenarios, right? If we go back even, we'll just do one more. I don't know, the 17th or something. Yeah, same deal. So we have sellers here at resistance. We have some support here, right? And here's even another one. Look right here. Sellers here, or I'm saying sellers as a selling is more aggressive, right? There's more hitting the bid than there is hitting the ask, because for every buy there's a sell. So you can't really say, oh, there's more sellers here. It's not necessarily how it works. That's only how level 2 works, right? Charting is a little bit different. You are unable to see that on the charting. Charting is the final printed sale price, right? But on level 2, you are able to see imbalance of supply and demand. There are more sellers at this price, more buyers at this price. You are able to see that. But on charting, you are unable to see that. You only have printed prices and the amount of sales that happened, aka volume, right? So same thing, look, this imbalance here, or this volume here, acted as support once the bias flipped. See that the bias flipped, it acted as support. Same thing, we get one more, see if we can get a bias flip here, and in this case they added to their position, and etc., etc. But it's the same. And now if we can see if they squeeze now. Yeah, there you go. So now you get the squeeze, and that will be a bias flip. You can see that acts as support there, right? So same thing. Now look at that. That's very, very volatile day there. Oh, this is the same charting. But moral of the story, that's how the market works. What is so difficult about that? Don't make trading the hardest thing you've ever done in your life. Guys, managing your emotions, managing your rules, managing your risk is already hard enough. You don't need to find crazy Fibonacci scenarios and all these things and using Elliott wave theory and all these crazy, the moon is this, and you're going to kill yourself. You're going to absolutely ruin your time in the market. Okay, trading is as easy or as hard as you make it. Don't make it too hard, okay? Understanding the market is psychological, is going to save you from a lot of the crap that people are going to throw you. People are going to throw you all kinds of theories. People are going to throw you all kinds of crap. But as long as you understand the market's the way it is because it's psychological, you're going to remain unswayed. You're going to continue to focus on your risk management, focus on your strategy, and be able to implement these things effectively. Right? Effectively. Thanks for watching. Join the Discord, maybe even. Links in the description. Have a good one.